FX Coins, this is Chris taking a look at the euro and the British pound. The euro initially tried to rally during the trading session on Tuesday, but the 1.18 level continues to be significant resistance. This is an area that's been tested 3 times, so it's not a huge surprise to see a little bit of pushback. That being said, we have to take certain things into context. The first thing, of course, is that there is an ECB meeting on Thursday, so it's a bit of a stretch to think that traders are going to pile into the euro and try to front run something that, quite frankly, they don't know how that plays out. The ECB's press conference and statement will also be important, so we'll have to pay attention to that as well. Keep in mind that we've been in a range between 1.18 on the top and 1.16 on the bottom for some time, so this is a simple reaction to that range. If we could break above 1.18, then it could open up a move based on the measured move of the euro going to 1.12. As of right now, it just looks like we're banging around in this same region. In the British pound, you can see that we initially tried to rally, and the reaction here has actually been a little stronger than the euro, which might be a little surprising. The pound has seen the 1.36 level as important multiple times, going all the way back to the middle of May, although we did briefly break above there. If we do, in fact, end up forming a shooting star, that would be a clear sign that we just don't have a lot of momentum at the moment. This brings up the value and the importance of the US dollar more than anything else, because quite frankly, if we find ourselves in trouble globally, those US numbers do tend to be very contagious. So, for example, the initial reaction to sell the dollar because of a weakening US economy makes a bit of sense. But with the United States being somewhere around a quarter of the world's economy, if the US is struggling, it does spread. And that might be part of what we're starting to see here because, ironically, when there are a lot of troubles out there, even in the US, eventually traders go to the US Treasury market, which means demand for US dollars. So I don't think this is quite a open and shut case of sell the dollar because the US economy is slumping. I think there's a lot of nuance going on at the moment. Pay attention to the 1.36 level because if we break above there, the measured move does imply, like in the euro, 200 pips to the upside. So that's basically 1.38. But if we pull back, we could drop all the way down to the 1.34 level to find support. Whether or not we get there, it's a completely different question. But that is the bottom of your range at the moment.